In this presentation, we will use tax software to test different filing statuses and their impact on the tax return on the 1040. Here we are in our tax software. We're using Lacerte Tax. We're currently on the 1040. We have our practice client here, which is going to be James Smith. As you'll recall, the filing status checkboxes are going to be up top. So note we have the filing status up top. We're currently having the check off of the single filing status. Married filing jointly would be the second filing status, married filing separate, head of household, and qualified widow, widower. So if we check off the single, then we can consider some of the major lines that would be affected. We're going to say that there's a straight 100,000 of wages, W-2 wages. First line that's going to be affected, major line affected, will of course be the standard deduction. And on the left-hand side of the tax form, we'll have the categorizations for the standard deduction. If they're single or married filing separate, we got the 12,200. There's the 12,200. The next line that would be accepted on, or would be changing on page 2, would be the actual tax calculation. So here's the actual tax calculation. You'll recall we have the progressive tax system there with different tax rates. Those different tax rates also being dependent on whether being single, married filing joint, married filing separate, or head of household. Single typically being the worst filing status to have for tax purposes. Before we move forward, just note that in the single filing status, we do have the dependent down here as a child in this example. So that would generally possibly move us from the single to the head of household. Not necessarily, but oftentimes that would be the case. So don't let that throw you off. Our goal now is to go from single to the married filing separate and see what the differences or changes would generally be in the line items that would generally be affected. Now, let's say we change the filing status, and let's say we have married here. We could jump right back in the Lacerte Tax software, go to the data input. We can go into our client information. Instead of single now, we're going to say that we're married filing joint. Married filing joint, and then jump back over to our tax forms, look at the impact on the tax forms. Going back to the tax forms, we switch over for married filing joint, now being the checked box off. What's going to be the change on the taxes? As we think about this, we're going to be keeping the same 100,000. Doesn't really matter who earned it for this purpose, generally for general purposes, right? Because it's going to be on the same tax return. It could be 50,000, 100,000 by one individual. We're going to be reporting it on the same tax return because we are reporting married filing joint. That means that we had two people that, if were unmarried, would file two separate returns, which are now filing one combined return. If they file two separate returns, they may have their own income for two separate returns, right? So when they get married, they can do whatever they want in terms of what's going to be the earning potential versus the household potential and whatnot. But if you thought about them separately, you would have two separate returns with possibly two separate income sources. If they're together, then you would think that the rules should be such that married people shouldn't be penalized for marriage, right? So that would mean that you would think that the standard deduction would be generally twice, because now you have two individuals of what it was prior to that. So it was 12,200. Now we have the married filing joint to 24,400 for that benefit there. And then on page 2, we have a similar situation with regards to the married filing joint. We're going to have possibly some differences in the tax rates and when, how high the tax rates can be before you get into another tax bracket, because now, of course, you have two individuals, and therefore you can't have the single tax brackets at the same rate as the two individuals, because then you'd have a penalty for basically getting married. So those are the two major things that will be adjusted. When you consider married filing joint versus single, however, you also you can't just keep the same 100,000 as we did here and say, well, there's a big benefit to the married, because you have to take into consideration that the married individuals, of course, have two people involved, and you would think then that a married taxpayer that has a tax return for married filing joint would come out in similar fashion as two individuals filing married filing separate. Now, normally, and if you're going to error somewhere, you would think that the government would want to error to incentivize people to get married. So typically, they don't want to penalize married. So you would think that the married filing joint would be at least as good or better typically than filing separate. Now, if you are married, then of course you only have the choice of filing married or you can't go back to single, right? Now you're at married, or you have the choice of married filing separate. Now, married filing separate is, again, usually something that you're not typically going to want to do because it usually comes out better. It's not as good as single. That's actually usually not the one filing status is generally worse than single is to choose to have married filing separate because you could lose some of the benefits, such as some tax credits that you may otherwise have if filing jointly or if you were single. But let's take a look at it. If we go back over and we go to the filing status and we change it to married filing separate. So now we're going to say married filing separate back to the tax forms. And we're going to say now we have the checkbox off for married filing separate. And just to get an idea of what will change in terms of the actual numbers down here, we're back to the standard deduction for the single or married filing separate, the $12,200. If we go to page 2, then again we have an adjustment to the tax rates that would be calculated in accordance with the progressive tax system in the tax tables. Then we have the head of household status. So if we go back over and we say head of household, and I'm going to go back in and say now we want the head of household. Now typically you would normally have a dependent, typically a child, to qualify as the head of household. You'll recall that the difference there being is if someone is not married, you would like them to be head of household or qualified widower or widower if there's that unusual circumstance, but you would like head of household, more common. And if they don't qualify for that, then single. Why? Because if you go to the head of household, typically you're then going to have a child here for the dependent usually. Will have the same $100,000. Now you can see the standard deduction is at the $18,350. Which is in accordance with on the side $18,350. If we jump to page 2, then we have the tax at $12,407. And once again, if you take a look at the tax rates for the head of household, you'll generally see it's going to be a beneficial status as well for the head of household over what would be the single. So I'm not going to go into the qualified widow or widower, but those are the general kind of ideas you're going to want. And when you change those filing statuses and you're using software or not using whatever, you're going to want to go back to the forms and expect which numbers are going to change, have an idea of what's going to change on the forms. And you want to have an idea when you're thinking about those situations where you have 2 returns versus 1 return, such as married versus single, married versus head of household, or married separate versus. You have to also take into consideration the fact that you have two individuals with 2 possible income sources as they are filing 2 returns versus the 1 return.